Alright, we're looking at exercise 11.5 from the textbook, and it's for Freshest Farmers Limited, and it looks like we've been given the balance sheet, assets and liabilities, and we've been given an income statement plus some additional information. We've got some additional information down here. Now I like reading my additional information first so that it helps me out doing a few other things. Now it says new machinery costing $127,500 was purchased for cash during the year. It's saying that old machinery having an original cost of $86,250 was sold for $2,250 in cash. Debentures matured and were paid off at face value for cash. Okay, so my debentures matured. It looks like I've gone from $150,000 here to $127,000. So it looks like I've got $22,500 there as a maturity. So I've paid cash off $22,500. It's telling me a cash dividend of $33,525 was declared and paid during the year. The accounts payable pertain to inventory creditors. Okay, that's cool. That means that my accounts payable and my inventory are linked. Okay, which is what we have been practicing anyway. Alright, so first things first, it's asked me to prepare a statement of cash flows for Freshest Farmers for using the direct method for operating cash flows. Now I'm going to do the whole cash flow statement because I get excited when I do a cash flow statement. So let's go. So first thing I want to be able to do is I want to be able to work out the cash flow through my accounts receivable. Now I'm going to quickly do, these are my operating accounts, these are my investing accounts, these are my operating accounts, these are my financing accounts, and down here all of these should be my operating accounts as well. Now my new machinery was obviously an investing transaction. My old machinery would be investing as well. My debenture matured would be a financing activity. My cash dividend would be a financing activity as well. So I've now, and this is accounts payable, that's obviously my operating, but it relates to my information up here. So now I've really classified all my items, I'm going to start to rebuild my cash flow. First things first, I'm going to do my accounts receivable. So let's go, accounts receivable, and I'm going to abbreviate that to account rec. Now my opening balance was $49,500 and my closing balance was $136,250. Okay, so my opening on my debit side was $49,500 and my closing was, what was it again, $136,200. Now what increases my accounts receivable is my sales. So I've got sales down here of $513,000, $513,000, extra zero in there. Now if I balance off that account, I'm going to add them together, that's $52,62,500, $562,500, and this is $562,500. Now, the only item that can be missing is, if that's what's increased my accounts receivable, the only thing that's going to decrease is my cash collected. Now, how much cash have I collected? Who's done the calc for me? 126,300?
Yes.
Now, that item becomes of interest to me, even though I've written in red. I'm going to highlight it because I'm going to put that into my cash flow. 400, is it?
Yes, 400.
Oh, sorry, 400. Okay. Okay, I'm relying on you guys to help me with my calcs here today. 426,000. Oh. Okay, let me just write that number out again. 426,300. Alright, then I'll start paying attention to you and we'll have a good relationship. How's that sound? Good? Alright, 426,300 is going to go into my cash flow statement. Alright, so and now I can tick off that item and my sales. I can tick off my sales as well. Next thing I'm going to do is my inventory. So my inventory account, and this is a two-step process because I'm going to try and work out my purchases. So my inventory, and my inventory started with an opening balance of 154,275. And I had a closing balance of 168,750. Now what increases my inventory is my purchases, but I don't know my purchases yet. But what decreases my inventory is my cost of sales. And my cost of sales is down here at 173,190. And that's my cost of sales. I'll just abbreviate that. And if I balance my account off, what have I got there? 40, 840, 940. 341?
Yep.
Alright. So I'm going to balance that off to 341, 940. Now how much is this amount that I'm going to have as purchases? 665. Is that one right? 187,665?
Yep.
Now that becomes of interest to me, but not for my cash flow statement, but because I'm going to put it into my accounts payable. Alright, so my opening balance in my accounts payable is down here at no it's not, it's 100,950. Hang on, let me just tick off my inventories. I ticked off my cost of sales. So I've got 100,950 and my closing balance is 138,000, thank you. Now my purchases number is going to increase my accounts payable. I'm going to abbreviate that to purchase, and I've got 187,665, and I'm going to total my account off, because what I want to do is I want to have my cash collected. So how much is my total? That's at 287, 288, 615. Oops, wrong colour. 288, 615.
Yep.
So this is 288, 615. So how much cash have I collected?
119,865.
119. 150, 615. 150, 615. Yep. And that becomes of interest to me because I want to put that into my cash flow statement as well. So that helps me tick off those two. I've ticked them all, and yep, okay. Next I want to do my operating expenses, or my prepaid expenses. So I'm going to have prepaid here. And I'm going to have my accrued here. Alright, my prepaid expenses start with 24,000 and they finish with 27,600. So I've got a debit of 24,000. My opening is 24,000 and my closing is 27,600. So that means if I balance that off, yep. So that goes to my operating expenses of 3,600, and I can tick off that one and that one. And now I'm down here. I can tick off that my accounts payable because I used those numbers already. I've got 25,500. So my opening is 25,500, and my closing is 25,050. So if I balance those two accounts off, I'm balancing off to 25,500. So that must mean my OPEX is 450, yeah. Or as I just heard, 450. Now the last piece I need of this puzzle, so my operating expenses is actually my operating expenses. So my operating expenses. Now because I've got a debit over this side, it becomes a credit over this side. So I've got my prepaid here of 3,600. And once again, it's a debit over this side, so it's a debit there. So it's going to become a debit on this side. So my accrued is 450. Now my operating expenses, obviously that's all debits in that side. So if it's a debit in that side, it must be a credit in this side. So my P&L summary is 18,615. So that gives me 22,665. If I balance the account off, 22,665. Cash paid must be 22,665. Now if you just wanted to just go, okay, well I know how much cash paid is, I don't need to, do that last little bit. So I've ticked off that, I've ticked off this one, I've ticked off this one. Have I got any other operating activities? I've got some income tax here. Now, do I have any income tax payable up there? No income tax payable. So I can assume then that that tax expense is exactly the tax paid. So that's going to go straight into my cash flow statement. What about my interest expense? Have I got any interest payable or interest? No. So I can sort of sit there and I can go, okay, that is now going to be in my cash flow statement as well.